Hello everyone, welcome to CryptoPi. In today's video, I want to talk about Bitcoin's outlook for the year 2026, which is the midterm year. And usually from previous cycles, we have seen that midterm years are potentially, or they have been a bear market in the 4-year Bitcoin cycle. I will show some observation based on one of the custom indicator, which is built on RSI. And basically to show what could be the price action which Bitcoin would follow in coming weeks, months, and over this year. So what we have seen until now is Bitcoin already made its top in October last year, and over here there was quite a euphoria happening in the crypto Twitter community that this probably is the start of a new trend, that we would have a bounce back here and then it will continue going up for $500,000 or whatnot, crazy speculations. But what I saw and I discussed in one of my, or actually 3 of my videos, was that we do have accumulation and distribution phases in the 4-year cycle of Bitcoin, and they are basically based on the halving of Bitcoin. And here we already had halving in 2024, and this was the halving year, and here in the post-halving year, that's 2025, usually we see the cycle has reached its top in the post-halving year. This happened basically in every single year. So we had a halving year, this was post-halving year, and that was the top halving year in 2016, and in 2017 we had a top. We had halving in 2020, and in 2021 we had a top. So for me it was quite clear to follow the trend, and there was no other information which would make me change my opinion that alright, we had 2024 as the halving year, and then 2025 would not be a halving, would not be the cycle top. So to me the trend was continuing, and I stuck with the trend, and that is what I basically shared in my previous videos. So where are we right now, and what did I mean by the RSI strength here? So first thing is that alright, what you're looking at is the yellow line, which is the 50 week, because we are on the week time frame. We are at the yellow line is 50-week moving average, and the red one is the 200-day moving average. So usually what happens in post-halving year, that we get a top, and then once the top has happened in the midterm year, so the year where according to elections it's a midterm year for US elections, the price basically goes sideways, makes a drop, which is to 200-week moving average, then forms accumulation zone, and then it starts going up again at the end of the midterm year or the year after that. That is, in this case, it will be 2027. So a pre-halving year. Now there is something which is new for Bitcoin in this cycle, that this bear market here, which is 2026, aligns with quantitative easing, which happened here in 2019. And we had a corona crash in 2020, and then since quantitative easing was in place, we saw a huge rally in 2021. In April 2021. Of course, there was a pullback, and people thought here that the bear market has begun. It was a downtrend, but it did not turn out to be a bear market, because if you see from the distribution line that the market still went up, and it made an all-time high just before the just before crossing the distribution line. And similar thing happened in this year as well. So what could happen? Let's look at it from the order block idea. So we do have an order block here. However, this has been mitigated, and we see a short bounce back. But here, since we are in downtrend, my bias is, in my analysis, my bias is towards the downwards price action. So the way I would see it is that we had a break of downward structure, which would be here. Or if I go on a daily time frame, I would mark this one as my breakout structure. And if I go back to weekly, this one is a strong order block, which will be here, and this will be my bearish order block. This red, and this would be my bearish order block. So the price is quite possibly that price can mitigate this order block over here before it gets rejected, maybe one more here, then it continues its downtrend. This would be a very simple and easy way to analyze purely based on order block and seeing that price has done a breakout structure at 98,000. Right now, what I see on social media is that there is quite a positive momentum that price is done with its bear market, and it will not follow the 4-year cycle, and it will basically shoot up to 150 and then reach its $1 million goal in this year. And maybe that happens. Who knows? Nobody knows about it. However, I would like to stick with the 4-year cycle trend, because that's what we have been seeing basically in all living the first cycles, first halving. Apart from that, since the market has matured, we have seen basically the trend where we do see a 4-year cycle. Now, what did I mean when I started the video? I mentioned about RSI. So here we have relative strength index, and it is using strength from 2 relative strength indexes, and one of them is fast and one of them is slow, and the slow one uses 21 as the period and fast one uses 5. And what we see here is that every time that relative strength index has crossed on weekly, apart from the corona crash where it went slightly below the mid-level, which is at 50, and since it was quantitative easing was already in place, it went down but got some support at the 200-week moving average and started its rally back up. Now, it's similar situation in this case as well, and again it depends upon when the price reaches the 200-week moving average, because if, for example, if the price does like this way and is already done crossing the 200-week moving average, and since it's a quantitative easing year, we might see already Bitcoin going into the accumulation phase, and then price crossing the 21st, price crossing the week of 21st September this year, we might start seeing rally or bull market of the next cycle. Otherwise, if it is way too early that the price crosses already right now, we might get an impression that bear market is over. But we saw it in the last cycle that 200-week moving average, it crossed already at this point. And after that, there was one more drop, which was here. And this drop is quite significant. So if you consider from 200-week moving average until here, that's 30% drop. So you could get Bitcoin at 30%. You could have got this at 30% discount or 30% from 200 moving average. But since I saw this one, I think that what is stopping Bitcoin from going below 200-week moving average, because it did happen during the corona crash. It's not a written rule that Bitcoin cannot cross 200-week moving average in its bear market year. And when I see at RSI, that RSI, whenever this 2 RSI, whenever it crosses the neutral level, Bitcoin price action tends to go down for basically, it crosses for the accumulation line. And here also same thing has happened, that Bitcoin RSI, Bitcoin price went down until RSI crossed the accumulation line, and then there was a short accumulation period, and then we started seeing some strength. Here as well, the RSI crossed the accumulation line, we saw the accumulation period, and then we started seeing the rally. Same goes in previous year. In 2015, Bitcoin touched 200 moving average, which is totally fine, found its support. However, RSI stayed in accumulation zone for quite some time before it started seeing some strength. So when you see some strength happening in RSI, that is when Bitcoin actually started trending upwards. And all of this trending upwards happens after Bitcoin's price has crossed the accumulation lines. So in 2015, it was accumulation line, 2018, 2022, and given that Bitcoin is following 4-year cycle, I'm guessing that it might happen this year as well in 2026. What we cannot know is what would be the price. So it's quite possible that Bitcoin stays within this range and it does not have a crash again like previous years. So in previous year, the crash was almost 77%. Perhaps this year we might not see such a strong crash because of quantitative easing, and we might see just maybe a 54% crash. But there's also a possibility that, all right, quantitative easing might take almost a year to really see some impact, to really have some impact on risk assets like Bitcoin. And the real impact might come only after September. So until then, if quantitative easing is not having any influence on it, what would price do? As per historical pattern, it crosses, it drops, not crosses, but it drops almost 70%. Let's say we consider that we have diminishing returns, and since we have diminishing returns, we also have diminishing drops. So not 77%, but 66%. And at 66%, it still is at 42,000. So that is still a significant drop considering from the top, and from here, if you consider over here, that's still 53% of the drop. And it's in some sense, it aligns with some support and resistance region, because here also you can see an order block, a bullish order block rather. And if this is a bullish order block where you did see some rally, however, I would not put it as a bullish, or you can actually, because this was a break of structure, but it did not rally quite strongly after this one. The strength was not there too much, and RSI was already in the overbought period. Yeah, so to me, this euphoria which is happening right now, I would not put too much thoughts into it that the bull market has regained. However, I would keep in mind that the strength on a VT time frame, which has much more strength over daily time frame. On daily, you might see that it is going up. On daily, you see, all right, the strength is going up, but that is only noise, I must say. There is an order block here, which is already mitigated, and it has to cross this one. There is another order block here, which needs to be mitigated, and this one is much more stronger. Already in first step, because here there is a break of structure. So there was a break of structure downwards, and this break of structure happened because of this order block. So this was the break of structure, and this happened because of this order block here. So if I see it on daily time frame, there is still some resistance. So it's just a pullback rally. You can say a bear trap, or whichever term you are familiar with. But I see it like this from a high time frame perspective. The strength has been weakening since August. So here we see that strength has gone down from August till September and till October, and price was sideways and price made all-time high. So this was in some sense a bearish divergence, because strength has been weakening. And if you would see from here, it's quite some time from this point to here, like this way, and from here to here. That clearly shows, all right, the price is going up, but the strength in the market has been continuously going down since the halving year, since the halving has happened. And given all of this 2 or 3 conditions which are right now spawning or coming into light, I would put my bias towards a downtrend in the coming months, or up until price crosses 200-week moving average, and then we see how much strength is still in the market. If you like the content, then do hit the subscribe button, and I will see you in the next one. Bye-bye.